the central bank decided that we would once again, after a period of about 5 months, that the policy rate would be increased, mainly because we want to give a very clear message that we would want to see the inflation being dealt with, and also to give a message that the external sector needs to be stabilized further. We have taken certain measures.
The central bank yesterday announced several policy measures including a raise in interest rates, checkmate runaway inflation and fresh incentives to boost foreign exchange reserves as part of overall objective of strengthening the macroeconomic stability. The Monetary Board in its first meeting for the new year on Wednesday decided the following. Increase the standing deposit facility rate and the standing lending facility rate of the central bank by 50 basis points each, to 5.50% and 6.50%, respectively. Distribute the financing of essential import bills for fuel purchases among the licensed banks in proportion to their foreign exchange inflows. Mandate all registered tourist establishments to accept foreign exchange only in respect of services rendered to persons residing outside Sri Lanka. Extend the payment of an additional 8 rupees per dollar for workers' remittances paid in addition to the incentive of 2 rupees per dollar offered under the incentive scheme on inward workers' remittances until the 30th of April 2022. Reimburse the transaction cost borne by Sri Lankan migrant workers through the payment of 1,000 rupees per transaction, when remitting money to rupee accounts via licensed banks and other formal channels with effect from the 1st of February, and introduce higher interest rates for both foreign currency and rupee-denominated deposits of migrant workers.
See one item of our policy measures, we have reached an agreement with the licensed commercial banks that they too would be bearing the financing and the arrangement of the financing of certain essential goods, so that essential goods are not only put as a burden to the state banks. So it will be in proportionate to the dollar earnings as well as the dollar incomes that they receive. We would be negotiating with them, and they will be taking a part of those bills as well, so that there will be a greater stability in the overall external sector. But, there would be a certain portion that should be also financed through those banks, because they receive the dollars coming in, and before items which are not of a absolutely essential nature, it is necessary for us to ensure that the essential items are first imported, because last year we saw that $21.5 billion worth of items were imported. So that is a comfortable number to have accommodated the essentials. So the fact that there was some concern about essentials means that before the essentials were met, non-essentials were also being imported. If you go to some of the supermarkets, you will probably see some items which are not absolutely essential, but oil is. At the same time, coal is in order to generate electricity. So what we are doing is we have had a discussion with the bankers as well, and we have reached agreement where they also will take a part of the essential items, so that we don't only provide that to the 2 state banks, so that all will take part of it, so that the essentials are thereafter given first priority. After that, the others can be imported. We don't want to see a situation where we have to struggle for essentials, but all the non-essentials are there. I don't think anyone of you would like to see that happening. First of all, we got to ensure that the essentials are also provided for. Excess imports, if I may use that word, have been taking place in certain items which may not be considered to be essentials. But as a result of which, some of the essential items were in that list where people had to come and say our containers are stuck. So what we are trying to do is, first of all, to make sure that the imports are done for the essential items before we shift to the others. So once that is done, like the foodstuffs, the gas, the coal, and medicine, and medical and pharmaceuticals, and oil, the rest of it, once you take the big items out, the rest of it can manage on their own. And then if one or two non-essential items are not coming at the same numbers as people were used to, well, that may be something that we can live with without too much difficulty.
For more latest news, subscribe to FTTV.